I'm Owen Bigland. This is the Inside Edge video blog. Time for my market update. This one for end of summer, late summer, starting to move into the fall, September 2017. So, not much has changed from the blogs I've been doing over the last year and a half here. When it comes to condos, the new stats are just in for the end of August here from the real estate board. The condo market, the strata market, continues to be an ultra strong seller's market. Not much has changed. Still very, very low inventory. In my opinion, 2-3 buyers for every seller. Just to give you the numbers here, I always like to use the sales to listings ratio. I've done lots of blogs on it. That is the real stat that you want to keep an eye on. It's how many listings get put out in a given day and how many listings are sold in a given day. And that ratio will tell you, really, it gives you the only real picture of what the market is doing. Now, you know, for a balanced market, we're talking anywhere from 12 to 20%. 18% is balanced. Anything over 18% is considered a seller's market. Anything under 12% is considered a buyer's market. So here are the numbers right now. It's pretty crazy. For condos right now, the sales to listings ratio for the lower mainland, Vancouver, Richmond, Burnaby, is at 77%. So remember, anything over about 18 or 20 is considered a seller's market. The higher that number is, the stronger the seller's market. We're off the chains here at 77%. So continues to be very little for sale. Anything that does get listed, if it's a good unit, when I'm listing a good unit or a townhouse, I'm usually doing holdbacks, meaning I'm listing it, exposing the property, looking at offers the following week, and generally getting multiple offers, usually over quite a bit over asking price, and usually most of these offers are going to be subject free. For the townhouse market, still off the chain seller market, it's at 45% sales to listing. And for the detached market, this number has been coming down. It's now down to 16%, which statistically is really a balanced market. Last year, that was hovering more into still a seller's market, although it was in the low 20s. Now it's slipped down to 16%. I'm here to tell people now, I'm always 2 or 3 months ahead of where the real estate board stats are. If you go back to my blogs I was doing years ago, I was predicting when it was got into a balanced market way before in 2012, before the real estate board ever admitted to it. But I will say now, for the most part, detached homes now have slipped into a buyer's market. Because I can tell you right from the front lines, I've got several detached homes listed right now, including a couple of luxury homes priced over $3 million. And I can tell you that I am not getting a lot of phone calls. I am not getting a lot of showings. You know, I've got one house in particular. It's a spectacular house that I think a year and a half ago I would have had multiple offers on. Today, you know, I'm getting 1 or 2 phone calls every 10 days on it. So I honestly think that detached homes right now are definitely now have slowly slipped into a buyer's market. Another thing to keep you up to date on here, we just had another quarter-point interest rate hike. This is the second one. Apparently, we may have a third quarter-point interest rate hike. So remember, I've blogged about it many times before. When interest rates start to creep up, that generally will have a lowering effect on prices. It's going to take probably another 1 or 2 more of these. Another quarter point isn't going to do too much damage, but if this continues, we get another increase this year, and they're saying maybe another 1 or 2 next year, yeah, that is going to have a dampening effect on prices. It'll affect the detached market first, and the most prevalent, it will be detached, but that will trickle down to the condo market. So we'll see how that goes in the future. We'll keep an eye on inventory. If that starts to creep up, if inventory starts to slowly go up over the next 2 or 3 months and we get another interest rate hike, I would say that prices are going to start to balance out or start to come down a little bit. Time will tell. The other thing too, and I blogged about this last month about the bankers luncheon that I went to. I talked about talking with some people from Toronto in the mortgage departments and how you know, mortgage tightening, we're going to be in store for some more mortgage tightening. It's going to get more difficult for people to qualify for a mortgage. They're going to be adding another layer of stress tests onto this. And I blogged about it last month, how, you know, the 5% down is pretty much done. Forget it. Most people buying their first residence, a condo or a townhome, probably going to need 10, 15%. In a lot of cases now, we're starting to move towards conventional mortgages. And I think we're going to see more of that. The banks want to see more skin in the game, more down payment. They want to get a lot more paperwork from you on your income and your expenses. And you're going to have to start qualifying not only at posted rates. You might get the discount mortgage rate, but you're going to have to qualify at the posted rate plus 1 or even 2%, which is going to lower affordability. So stay tuned for more of those, but there are some more mortgage tightening coming down the road, which this is probably about the 5th or 6th time they've continued to tighten this. The bottom line is, folks, I guess, the banks want to, the finance minister wants to see less risk on the books from CMHC and Genworth. And they want the banks, they've given them a mandate that they want to start tightening up on this and less risk to the consumer. They've got more debt, so they want more skin in the game on the mortgages. So essentially it is going to make it tougher to get a mortgage, and it is probably going to affect the affordability for a lot of young people. We'll see how it goes going forward. Stay tuned, and I'll probably do some more blog updates on this later in the fall. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.